Hello and welcome to this symposium on the 16th of January 2018. Today I'm going to run through the core strategy once again, and this is just to introduce the new members to the strategy, the supply and demand strategy, and how we use the supply and demand software and the intra-candles and the currency strength software to help us make better trading decisions. I'm not going to go too much into detail regarding currency strength because this is perhaps not an introductory topic. I'm going to focus pretty much exclusively on supply and demand for this symposium because this is the most important one. If you get this down, then you don't need anything else. So I'm going to reiterate the core strategy, and then we are going to look at some questions that I received from Daniel. I'll run through these one by one, and then we should wrap things up after that. I think maybe we'll be in here for about 30 minutes to 45 minutes. Okay, so let's start off with the core strategy. What we need to do is we need to consider for a moment how we trade. Personally, I like to trade longer term, so I'm looking at the big time frames, which means that I'm normally not looking or rarely looking under the 4-hour time frame. I like to look on the weekly chart, and this enables me to assess a trend, and you can see very clearly here that we are able to assess the trend by drawing trend lines. And this I like to do because it just helps clarify a lot of things. And if we have a look here, in order for us to be able to draw a trend line, we need a low, we need a high, we need another low. Let me turn this telephone off, and then we need a high that manages to trade above this high here. So we go from here to here to here to here, and as you can see, price is traded above this high, which is good. So that qualifies this one as the most recent swing low, and this is of course the previous swing low, the only valid one on the monthly chart. And so for this we would draw a trend line from here through here like that, which gives us a very clear uptrend. So let's just do that very quickly. So we'll get a trend line, and the software is going to manage all of these for us. So we'll just connect it from, it doesn't have to be anywhere clear. We'll take from here to here just so it's nice and clear. We can maybe go like that if you want, but you can just to signify that we have an uptrend. That's very clear, I think. I think we can all agree on the fact that we had an uptrend. Something else that we'll notice is that we had these highs here. See, we could actually mark off these highs like so, but I'm going to take kind of like the highest open or close of the whole area, and that brings us to this candle here. Let me zoom in for clarity. This one here, and so this is interesting to me. You can see price tested it. We had a deep test, a bunch of tests. We opened here, and we left it from there, and then below that we have this what appears to be a continuation pattern. It's not very clear here because it's not a white candle, but if you look at this candle, you can see maybe that we have this here, and the bottom of this candle here kind of pokes into the middle of this candle. So I'm going to draw an area from here, from the lowest low of the candle to the left to the lowest low of this one here. So we look like this, and the reason I'm doing this is because we have demand in here. We see this candle traded above and beyond the highs of this here, and prior to it leaving, we tested the edge of what we'll consider to be monthly demand. And so this is a very important area to us. You can see price did not manage to come below here. So when price manages to come back to the lows here, we know that this is going to be uncharted waters. On the weekly and on the daily, this is going to be a very clear pullback. Price went up, it closed, we opened, we came down, we pulled back. We found liquidity required to drive price higher, and then we left. So now, taking this information with us to the smaller time frame, the information being we have an upward sloping trend line. Let me turn this blasted telephone off. I thought it was. Okay, so we have an upward sloping trend line. We have an uptrend on the monthly chart. Good. We take this down to the weekly chart. Then you can see very clearly what we mean by this lovely continuation pattern, how price rallied, accumulated, we went higher, we pulled back, and then we left. So if we look here, can we do the same thing as we did on the previous time frame. And you can see that we have a low. Let me draw this in here. We had a low, a high, a low, and a higher high. So price went from here to here and here to here. And price managed to trade above and beyond this high and this high. So the trend line for this would be like that, which is pretty much in line with that one there. So we'll just draw that in. Excuse me. From here to here. So these are clear swings. We have a low, we have a high, we have a low, we have a high. We don't want stuff like, we want clear swings. I'm not going to show you what we don't want. I'll show you what we do want. We want clear swings, and this is the least clear swing that we want. We want it to be at least this clear or clearer. We don't want to focus on stuff what's going inside. We want to be super clear swings. If we continue using our trend lines, you can see that we had something similar here, less clear, high, low, high, low. So we can draw a downward sloping trend line like so. When price left this here, we managed to move above and beyond this continuation pattern. So we had supply here, and this is supply because it consumed this micro demand. This is micro demand because it's not clear in here, but I know that it's clearer on the smaller time frames where price traded above and beyond this high. So we had strength in here. This is actually on the daily chart. This is a child. The parent is down here, but price went up. It came down. And you can see this something up here. This area of supply consumed this demand here. So it actually moved this from there to up here. When you do that, you'd be selling here. This is your entry to sell, but you wouldn't trade that because we broke a trend line. When you break trend lines, you have to be careful trading against those because there's a lot of strength involved in this. And so also, I mean, price is rallying. We have kind of like a bullish flag. This is normally a sign that price is kind of loading the gun to move higher. So price is accumulating long positions. We break the trend line. This shows us that we have strength. We move above this, and when price leaves this, it moves higher. And so because price managed to consume this small continuation pattern, we are able to take this. We'll take off the whole area. So we have that. And so when this happens and price moves above this, then you can look for a buy around here. And price came down to the 1700 area, and this is where it bounced. And this is good because this is in the direction of what of our greatest period trend, which for us is the monthly chart, or for me is a monthly chart. You can apply this stuff on any time frame you want, but I trade longer term, so this is the thing what I'm going to explain. So it looks a little bit like this. So we have this, which looks good. We have this, which is now gone. Which area of demand did that? This one here. So we go from here to here, then here down to here. So we have a tiny little area of demand here. This is great. Price went higher and left. Right, now we go to the daily chart. Before we do that, I mean, this is gone, this trend line. We've already marked off our areas of demand. This one, we have this one here, and our price is moving higher. So we have an upward, so we have a bullish bias. We have monthly and 2 weekly areas of demand here. Now we go to the daily chart. We do the same thing. I'm just going to turn this functionality off so we're forced to find it ourselves. We don't want to cheat. We want to work. This is how we're going to learn. Force, close all that. Good. So now we have something similar. Mark off the clear swings, low, oops, wrong thing. Let me grab the pen. So we have low, high, low, high, low, high. Super nice acceleration going on here. You can see how these legs up get steeper. This is great. So we want the two most recent swing lows. So we have the first one, we have the second one. When price left here, moved above here, so we connect these two. So this is our upward sloping trend line on the daily chart. So we'll mark that off. We'll just go from here to here. This is what we got. Let me mark this off properly. It's teasing. Okay, let's go like that, just so it's easy and clear. Super. Good. What do we have here? We have some serious buying. I know a lot of people that got caught in this trade are looking to sell up here. Looking to sell here because price, quote unquote, should turn around. Does price care what it should do? Absolutely not. It doesn't give a damn. It roared north not as expected, as it did. It flew higher. So we have monthly, weekly, daily upward trend. What does that mean? Does that mean you want to be selling? Probably not. So if we go back to the bigger time frames, got to mark off some opposing areas of supply. These are interesting to us, and you can see we have something here. We've got a couple of things here. We've got this one here, which I don't like too wiki. We have this, which is good. We have this, which is a mess. I don't like this very much because this is kind of pulling back. So I wouldn't start to sell until price got up to the highs of these pullbacks here prior to this release. There's no reason to sell until price comes up here, and that's because this is the only, and this isn't even a decent area of supply. I mean, look at the way price left this area. It kind of moved down, it kind of farted around for a while, and then it finally gapped down and started to show a lot of momentum to the downside. And so, man, this is probably, what is that, the 12600-ish area is probably the first place that we're going to start to see price slow down. We're slowly feeding. We have this little one here actually. This is actually the candle prior to the big release. So nothing really happened big here, and then price finally gapped down here. So it kind of originated from here, but I wouldn't trade this because there's this prior, which I don't like. I want to see clear moves, which I don't really have. There's nothing here. This is okay. I like simply the structure of this, how price came down, we rallied, accumulated, and we moved below this one, and then we dumped. And we haven't really pulled back. We've only pulled back to the highs of these tests prior to the release. So I'm not going to touch this one, but I would consider taking this one and putting my stop probably above this little one here. And so I think you could keep buying until price gets up to here. Yeah, well, just be careful. Just know that you are entering some like a thicket of liquidity just up here. So just keep that in mind. So what we do now is you would expect price to pull back, and you'd look to get into a good price. And so we'll go back to our smaller time frame, and you would identify the most recent move. Where is the most recent move? Where's the origin of the most recent move? And you can see the origin of this leg here is down here. And so you can see, we'll mark that off. We'll go like this, let's mark off the whole area. This is a pretty interesting area. So what we're going to do is we're going to go like that. We're going to mark the low, like so. We're going to zoom out. We're going to look left. And say, is this fresh demand, or is it reacting to something else? And you can see that this is reacting to this. And this is reacting to this, just in here. And this is reacting to this. So you can see how these are all chained together. Parent, child. This is a minor continuation pattern. Price came back, tested the edge of it. So we have that one. We have this one here. So what we're looking for here is we're looking for an area of demand, in this case demand because we're buying, that has not been tested. And do you take the ones down here, or do you take the ones that are closest to price? Well, obviously you're going to take the ones that are closest to price. But for longer term trading, you want to look at the origin of the most recent leg. The origin is just here. Then you want to work back from here, because this is where the big buying started to happen. A lot of people started to buy once price came back here. So we can expect that if price goes lower than this, there's going to be an even bigger interest in buying, unless price has already fed into opposing supply, as then the order flows could overempower the buyers and have an even deeper retracement to to an order block that is lower down. But for the time being, I mean, you can see that we have stuff going on here. We have this here, this nice little. You have this going on in here, which is interesting, like so. 1966. So you could put your stop. Come on. Oh, pain. Like this. So this is interesting because this is the origin of this move. So again, this is like a micro origin. This is the origin of this micro move. We're on the 4 hour, but you know that on the hourly chart that this would be down here, and this would be up here. So you would be looking here, and then you could ask yourself the question: is this a reaction to anything else? No, it doesn't appear to do so. It's just testing the highs of this. So this would be okay, I think, to look at. And if we maybe do that, we'll go to the 4 hour to start off with. In the 1 hour, just to see, you can see, oh, here we have it. You can see that, let me zoom out just to be sure. Yeah, this is where it all starts. And here, this is the origin of it. So you ask yourself, I mean, everything started from here. You can see how price came down here. We left. We came back down. We tested this, and then we left from here. But looking at this, you can see that there are some areas of demand that are still untested that we could consider. You look at this one here. And we have this one here. We have this one here, which is being tested currently. And so this one is no good. Why? Because it's been tested. See, this is the test here. Now it's kind of the second test, so we're eating through this. Then we have this one here. Let's have a closer look at that one. And what do you think about that? If you look at this, you say, okay, what do we have here? Is this a nicely structured area of demand? Okay, first of all, how did price leave the area? Well, the price left the area pretty nicely. We didn't have like a big push away like this, but we did have like a decent rally away, and price has not been back since. If you actually look at this, the wicks came down as low as like this maybe. So 121.76, very small on my screen. This is kind of the cheapest, the most expensive you'd want to pay for this. But if you look at this area here, I mean, this isn't a very nice area at all. We have 1, 2, 3, 4, 5, 6, 7, 8, almost 8 accumulation candles here, which is telling us that we can either pass on it or we can go to the smaller time frame and have a closer look. And if you have a look on the small time frame, it's still not interesting. There's so much trading in here, and there's so much agreement in supply and demand, leading us to believe that this is not a very interesting area. You can see how, I mean, price is kind of doing the same thing here, and price didn't really have a very big bounce here. So this is not a very interesting area for me. And we have this one here. This is, again, come on, not very interesting. Let me see if I can get a hold of that sucker. There we are. It's not very interesting to us because, I mean, price just went up and it kind of sat sideways for a very long time. What we do have is we have this little one down here. We'll mark it off like that. Because when price left here, it did not come back anywhere close to this one. We're still about maybe 10, 15 pips away from there. So 120.12 is the first area, the first price level you'd want to start to buy. Would I buy there? No, I wouldn't. Why? Because it's a 30-minute chart. I don't look at 30-minute charts for much. But what I would do is I'd look on the time frames here, and I would have a look and then have a close look here, and you can see that, I mean, this major pullback came down to here. So price is happy to come down to this level here. We have price left. We formed this area. Price came back, tested the lows. Price rallied, accumulated, rallied. We formed this. So we're probably going to get a reaction here. We're going to get a reaction here, a small reaction here, and then price is going to come back down to here. And we're going to have a reaction here. We're probably going to have another reaction in this area here. Small bounces in these, of course. Then price is likely going to feed down to some other areas of demand that look a little bit more interesting. If you look at this one here, how price rallied, accumulated, rallied, and we kind of came back. This is not very good for business because you can see that, I mean, price has already pulled back to this level here. You can see just here price went up and we pulled back. So there's something in here that we could have a closer look at. This is fresh. This is kind of traded out. If you want to have a good look at it. But this is pretty much what I'm doing. I'm looking on the major time frame, the monthly, going on to the weekly, marking off my trend lines, my areas of supply and demand. And I'm looking at the origin of the move on my entry time frame. So we have the trend, long-term trend, medium-term trend, and we have the entry time frame, which is a daily. So I'm looking at the origin of this one here, and I'm not buying for a price any more expensive if we're buying than the lowest low of the most recent pullback. So this is the price I'm going to look to start to buy. The buy zone starts when price comes down below this low. Then you have to find fresh areas of demand at which to buy. We had a pretty decent reaction here. Price could easily come back down here and have another bounce. Could also come back down to this area here, which is just below, as price has not been back to this level before. It's been back here once. It could work again, but it's not sure. This one is untested, which I like. We had a tiny test on the release. Look what price did when it came back. It shot up like a rocket. So this is a decent area here. It'd be a pretty small stop. I can't even see what size the stop is. Right. What is it? It's 43 pips. Pretty tiny on the daily chart. So maybe you'd want to box off this whole area here. Put your stop below here. I like that. I like the price went up. It came down, up, came back, up, accumulated, and then shot up. So I think we're probably going to get a reaction, something that looks like something like that. Somewhere around there, something like that, I think. Yes, so that's pretty much what I'm doing. I'm going to do it on another pair. I'm going to have a look on the, this is the presentation I've got on Thursday, a difference between looking at price and looking at indicators. We'll clear this off. I'm going to delete all of these. Okay, let's grab another one. Let's have a look at the dollar yen. So if we have a look here, monthly, what's going on here? Okay, let's look at some trend lines. What do we have trend line? Excuse me, trend line wise? Well, this is going to be a tough call. So I'm going to get out my pen. I'm going to draw only the most recent. So I'm going to go here, there. That's kind of what we have so far. And so there's not a whole lot to see on the monthly chart, is there? If we wanted to, the only swings that we have that are valid are this one and this one for a trend line like this. The trend line would break. It's taken out some demand here, so we would have an area to sell just up here. Price came close to it, didn't quite pierce it. I like this one better up here. This level here, because this is like the parent, the child testing it, and then it left. So I'm thinking if price manages to rally up here, then like selling somewhere up here, stops in these like up here where price has not been back to yet. I like that. So we're going to mark off our trend line for this, kind of a big one, but that's all we have to work with at the time being. We have this, but we don't have any clear swings here. Some people might argue that you could draw it like that. If you want to, you can, but I wouldn't, simply because we need clear swings, because this shows the distribution of liquidity as price moves lower. This is about as bad as of a swing I'd like to use. I'd like to see high, a deep retracement, and then a pullback, just really nice clear swings. If price goes down here below this, well, then we have our trend line to go down like that, which we don't have that yet. So this is probably the most recent one on the monthly. Go to the weekly. What do we have here? Well, here we have something a little bit different. If we have a look, you can see that we have, let's draw these again by hand. Go from here, here. So we have a high, another high, we have a low. I'd like it if price came a little bit further down, but it hasn't, and so we will be maybe moving in a little bit early, but that's fine. So we'll just put that trend line in. It's valid. Price did manage to move below here. We have a downward sloping trend line here. What does that mean? That means that we have a downward trend on the weekly chart. We had this here to here. And price left here. We managed to take out the demand here. So we would have sold here. Just here. And followed it lower. Don't know if any of you managed to get in there, but if you're trading big positions, you'll bleed swap short. You'll be paying, what was it, $5 per lot per day, and on Wednesdays 3 times that. So it can get pretty expensive if you're trading big positions. So we have that. Excuse me. So this one is still in charge. This one has not been violated yet. And so if we take this information down to the daily chart, and then we have a pretty similar picture here, and we simply have from this high to this high. So it looks pretty much similar to the weekly one. You can see here. I have a high. Let me zoom in. High, low, high, low. So price was actually trading in here. I like this. Actually, we had this when price left here. Okay, let me show you why I chose that. If we have a look at this, marking off these areas, I like this. When price left here, it traded above and beyond the areas to the left. This is a nice area. Okay, this is where price is testing now. It's tested it once. Probably going to get a reaction. Well, we are getting a reaction. So price left, we gapped up. You can see when price left, it was telling us exactly where it was going to come back to on a release. When price goes up and it comes back down, every time it comes down, the deeper it comes, the cheaper we get to put our entry. You have this. This is the cheapest price you want to pay. Price goes up, it pulls back. You can see here, price pulled back, so you can go here. If you want to be super careful, you can just simply close the gap, which is going to be here. Price closed here, and it gapped up. So this is when it closed the gap, this is where price came to the pip. Price came up, and of course you're going to get reactions here and everywhere else, but you're going to have to manage them a little bit more aggressively because the moves are not very big. If you consider this just for a moment, from here to here, let's assume that this is a good one, we want to trade that. You would have gotten there. Did price move at least 3 times the size of this area of demand away? No, it didn't. It probably moved 1.5, 2 max. So I mean, that's a no-go. Let's see how big that is. That's 62, so you want at least 186. Sorry, here it is, 186. We didn't get that. We got about 2.5. So that would be okay. You'd have to manage it a little bit more aggressively. So we have that one. That is gone. So which area of supply took out this demand? Well, where did it cut out? Well, it cut out right here. This area, right here. Cut it out. So this is where you tag your entry. This one is now gone. Who did it? This one did it. Price came down here. We moved into this area of supply again. We came through. We cut through. What area of supply took out this demand? Which is actually, this is the one here. Price tested it. Price came back. We had a reaction. And then it cut through it. So this is like very, very interesting. So we see that this is pretty much gone. Yes, gone. So we move this up to here. We'll mark off the whole area because that is where we have, and this is still in play. This is currently driving price. The supply in this this daily area is driving price. Move down to here. So now we're going to probably trade between this and this. We're going to see very likely a reaction just here. And so now what you can do is you can go down to the smaller time frames and say, okay, well, we know we're reacting at daily demand. What do we do? Well, what you want to do, we're not seeing it here. You go to the hourly chart. You can see that we have some stuff that looks like that. I need to look at this daily area a little bit clearer. Not before I can make any decisions. Okay, here. And you can see here that this daily area pulled back to this. So this is interesting. Look how close that is. I'm going to go like that. I'm going to let it rip and go back here. And so now I know when price comes back down there, let's zoom out a little, we're going to have a tough time moving through here. This is the bottom of that area. Price already came back down to this level on the release on its way up. So price could easily wriggle through here and continue moving lower. Here we have a trend line break, but this is not an impressive move. I would not be buying. I would want to see a deeper retracement, and I'd want to see a much deeper and clearer pull away. So assuming that we move this like over here, I'll redraw it, the desired situation, our price kind of moves into it, come up, we have a push, so we have valid supply here, we form our area here, and then we cut above, and then we can mark off this area as demand, as the area that took out this one. So this is what we would target to buy on an expectation that price would move higher. Entry, stop either here or here, 2 times this, 1, 2, 3, sorry, 3 times, and that would be our target. But you've got to keep in mind that we are reacting up here to this weekly supply, but you can see that there's no supply. Let me remove all of this stuff out of the way. There's no supply here opposing price until we get to here. This is the only fresh supply. This is nothing at all. So this is the only one here. When price left here, we managed to move below this. So that means that this is important and strong. So this is the area that you could get out of the trade. But price is not showing me anything that convinces me that it's going to continue, that's going to turn around. I want to see price do a little bit more down in here. And due to the fact that price has already been back down to this level right here on the release, I'd feel more inclined to wait for price to come back at least to the 109.50 area before I look to buy, and then I would probably just put a limit order in to buy, assuming there isn't any news coming out there. Anyway, I shan't ramble on. I can go on for hours, but I'll leave it at that for the timing, and I'm going to get to your questions, Daniel. So let me turn off the drawing tools. Okay, the first question is which supply and demand levels to ignore because they are minor. Well, if we go here, we have this whole concept that we talk about called the parent and the child. I'm hoping that what I said so far helped clarify your question, but I'm going to go through it one more time just to be on the safe side. Okay, so if we look at these, I mean, obviously not all of these swings are interesting to us. So not all of these areas of supply and demand are interesting to us. This was a nice one. Why? Because when price left, it gapped up and we held away. So we trade only the first test. This is the first test. We do not trade it. If price comes back down here, you do not trade this area again because price has already violated it once. How far did it go into the area? Well, it just kind of kissed the edge of it. So liquidity is going to be down here. So you want your entry to be at least as low as the lowest low since the pullback, and you do not want it to violate this. You don't want it to move into the thicket, into the bodies of these candles here. If that happens, then you have to look for something else. So you want fresh areas only. And if I'm going to rate these areas, okay, this is like a 10 out of 10. And the lower you go here in the curve, it gets lower. This is 0 out of 10. This is 1, 2, 3, 4, 5, 6, 8, 9. So the closer you get to the origin of this move, the higher the probability. So if you're picking areas down here, you have to be very careful, and they have to be very nicely qualified area of supply. Even though this one here managed to react, I would never have traded this one, because when price left here, we didn't have any closes below anything here that looked interesting. We had this supply demand, which was still in play, and I mean, it wasn't consumed until this happened, but then we had a reaction here. So this is price feeding into something much more significant to the left, and then price rallied, accumulated, rallied. And so I would never have traded this just because you can see all these wicks, these tests prior to moving lower. This is clearing out liquidity. The only areas that we can see that are fresh are, you look at this, wick came back, wick came back, wick came back, but then you have this nice bar and then a very, very clear one period accumulation pattern. So here, this is okay, this is okay, and this is absolute, this is nothing. You don't even consider any of this. You want to go look for these. These are very clear signs that we have some selling going on here. We didn't even have big reactions. We had a tiny one there, maybe 1 to 2, a small one there, maybe that was probably 1 to 3. But the big move came when price came to the origin of the move. Why? That's because this is such a good price to be selling that there are going to be so many more people interested in selling at an even higher price than this. So if you're selling from here or higher, you are absolutely positioning yourself at the same area as other people who are looking to sell for a high price. And so as the further price goes to the origin of a move, the better. And so this one, the ones up here are certainly the ones that you want to be looking at. And again, you want to be looking at the parent-child relationship. So if you're looking at, if you have an area here like so, price is in there, it moves away, it comes back down, moves out, controls, accumulates, and moves higher. This is less probable of working out than this one here. Rather, this is a higher probability than this one. Why? Because this is likely the origin of this entire move, like this one is here. If you're messing around in the middle, then things can get a little bit tricky. Question 2, which supply and demand levels to ignore because of the current sentiment or trend? A really good question. For this, I'm going to go to the euro because this is a really nice example on the euro. And this is why I did not sell the euro. If you look at this, this takes a little bit of time to see, but with time you're gonna see it clearly. Okay, when price is trending higher like so, we have this really big move down, then price starts to trend and begin to move through the thinner liquidity and reach these pools of liquidity here and here and eventually up to the top. When price is trending like so, what you do not want to do, let me draw again, you do not want to trade, oops, sorry, I need to zoom out. Yeah, okay, that's fine. You do not want to trade supply and demand, opposing, in this case, supply on this leg. You don't want to trade here. You don't want to sell here. It will not work. It really will not work. And 19 out of 20 times you will lose. I know a lot of people saw this and said, oh wow, when price left here, we managed to remove this. That may be so, but where are the flows? What are the flows doing? The flows are buying. And so when you have this, when price is trending up, do not look at this leg to sell. You have to look on the big leg, the one that is moving down. Okay, this is so important to understand. You cannot, there's nothing in here that is going to give you a reason to sell. Nothing. You have to start moving, looking over here. This is where the big move is moving. This is the origin of this move, and so you want to be looking over here. You cannot be looking in the leg that's moving against this leg to be selling. You have to be looking over here. We have the liquidity that is here and here. We have some up here as well. And of course up here at the top. Not here, look left. So when price is trading in a direction like so, when it's moving up, when you have something coming down like so, and it starts to trend against you, do not look on the current leg for places to sell. Always look to the major leg for places to sell. Opposing supply. This is not opposing supply. The rectangles of the software, I'm just going to turn it on. the rectangles of the software, let's move on a smaller time frame, are they above or are they below price? They are absolutely positively below price. What does that mean? We have demand being respected and supply being consumed. All the X's, let me go like this, all the X's are above price. And so you want to make sure that you are mindful of this. This is going to tell you what the trend is doing. So if you have boxes below price, you want to be buying. If you have boxes above price, you want to be selling. Super, super simple. Okay. Point 3, mindset, trusting the areas to the target. That's exactly it. I mean, when I trade, the way I trade, I probably trade in the most carefree manner ever. And that's simply because I don't want to spend too much time looking at the charts. And the reason for that is, then you start to second guess what's going on. And so when I look at something like this, I look at this, for example, I'll make my analysis at a time where I know that I'm in top form. Mentally, I'm in a good state. I'll make the analysis in that state, and then I'll stop. If I'm not feeling, if my mindset is not optimal, then I won't look at the charts, because I know it'll make me question my previous trades, my positions. So what I do is I'll simply put on these areas, I go into the monthly chart, and I'll simply grab the pairs and I'll move them over like so. I'll say, okay, what am I going to do? Right now, I know exactly where I'm going to sell. And where is that? And what's price doing? Is price going up or is it going down? It's going up. Am I going to try and sell here? Absolutely not. Where am I going to start to look to sell? Over here in the leg down. And where is that level that's just dying to be sold? Right here, right there. Why is that interesting? Because we had this area of demand here, a big area of demand. I mean, look, rally, accumulation, rally, boom, 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 and price just moved away for months and months and months, years. Now price started to break down. What area of supply took out this whopping supply, whopping demand? This one did here. This is where you sell. Put an order in to sell and walk away. Keep in mind that you will be paying a little bit every day if you're selling. But this right here is exactly where you want to sell. So I'm going to go like this. Matter of fact, I'm going to put this one on. And so the position, it's a big stop, 250 pips, 4.55 lots. And what I'm doing here is I'm putting a comment. I go monthly supply. So I know where it's qualified. And I say on sell, I want to sell at 87.46. 87.46. My stop is 89. I'm going to put 90. My target I'll do in a minute. We'll just leave it like that for the time being. Now I know when price comes out, I want to be selling. Done. This is on the monthly chart, you know. Let's grab another pair. I got a bunch of orders and I have to review my orders. Every week I go through and I add some and I remove others. Let me go here. Let's try the pound. Let's find something else. I don't know. Let's try this, something different. And so we have this here. I do the exact same thing here. I'll go on the monthly chart. If there's nothing on the monthly chart, then I'll go to the weekly chart. And if there's nothing there, I'll go on. I'll probably switch pairs actually. I just go to a different one. I like to stay on these big ones because this is where the action is. And I look. And that's pretty much how I'm doing it. I can hear that my family just came home, so in about 3 minutes there's going to be an explosion of child hollering and this and that. So I'm going to cut it short. I apologize for that, but Daniel, I got to your questions and we reiterated the kind of the core strategy, and I hope this video will help kind of shed a bit of light onto the process. If not, I mean, let's just we can chit chat about it in the forum where I think most of the people hang out. Anyway, I'll finish up for now. Thank you very much for watching, and I will see you in the next symposium.